Welcome to It's the Economy. Has the Capex cycle in India started in right earnest? That's the question we are asking. What are the signs? Non-food bank credit has jumped to 15.5% in the latest fortnight ended September 2nd. This is the highest since FY13. Secondly, the budget has committed a capital spending of 2.9% of the GDP, which is the highest in 18 years. Capacity utilization at companies is at 75.3%, RBI governor said, higher than the 10-year average. Corporate profits grew by 39% in FY22, I mean nifty EPS, and corporate debt to GDP is at a 15-year low. So, are all these indicating that we are seeing signs of investment? I have with me two experts, Aditi Nayar, the principal economist at ICRA, and Mahesh Vyas, managing director and CEO of the Center for Monitoring the Indian Economy, CMIE. CMIE is the ultimate repository of this data, and I believe they have just studied balance sheets of 3,299 companies to see if investment has begun. So, over to you, Mahesh. You are the high priest of projects started, projects stopped, projects intended. What is the latest data telling you?
Well, you gave a very high responsibility, very heavy responsibility on my shoulders by calling me high priest, etc. I'd like to duck all that, Latha. I'm not capable of all that. But let me tell you what the data tells me. And we study two sources of information. One is the Capex database and the other is the Prowess database. Now, you know, if you look at all the things that you mentioned earlier, credit cycle is seeing an uptick and capacity utilization is high and so on and so forth. Not all that only, but even the profits of the Indian corporates is very good. Their gearing is very low. Their interest cover is very high. Everything that we can imagine that we require for a Capex rebound is all in place. But it isn't happening as yet.
Okay.
There could be good reasons for that. The corporates know better than we know, but they are not investing as yet. And the 3,299 companies you mentioned, we did analyze them, and we found that in the year ended March 2022, investments into net fixed assets was barely 2.5%, less than 2.5%. Investments into plant and machinery was less than 1% in nominal terms. So, you know, they are not investing as yet.
Oh, okay. But Mahesh, you also were studying, or CMI was studying a quarterly report we used to get on projects stopped, stalled, and projects restarted. You had a bunch of parameters. Are they showing you any green shoots?
There is some good news and there is some not so good news over there. The good news is that investment proposals in an aggregate sense have increased. So they did fall understandably during the COVID times in those first 2 or 3 quarters of the COVID. But in more recent times, investments have picked up again. They're not as good as they used to be in the best times, but they are not really in the dumps. So new investment proposals have improved, but their completion has not improved. Oh. And there is great sluggishness in that. We had expected in the year 22-23 investment completions to reach a record 12 lakh crore rupees. And usually this is around 6.5 crore rupees, lakh crore rupees or so. Okay. So we had expected a doubling because there's a lot of delay in the past 2 years.
Yes.
But the first 6 months tell us that the progress has been very patchy so far.
Oh, okay. So maybe we still have to wait for the big arrival. Aditi Nayar, you study government balance sheets, both state and center, very closely. So let me ask you from the government angle. The Capex intentions are very big in the budget. Like I said, 2.9% of GDP is a 2-decade high. Is it seen on the ground? And if you include the states, what's the picture?
Thanks, Lata. You're absolutely right that the investment intention from Government of India's budget was very high. We had a large amount of money being put towards Capex. But I just want to point out one thing, that the incremental Capex between last year and this year, a very large part of that is actually concentrated in the interest-free loan that is being given to the state governments. So on that count, we're actually shifting the execution risk to the states. So far, we have data for Government of India for April to July, and there's a very high increase in the capex in year-on-year terms on a lower base because we did have the second wave of COVID-19 last year. But this capex loan scheme, while a large amount of projects were approved in July, the actual offtake under the scheme doesn't seem to have been robust at all up till that month. So the action really lies ahead as far as the capex loan scheme is concerned. The state, again, budgeted for a very large increase in capex, but that's something that we do need to take with a pinch of salt because we do find that when we do a variance analysis and we compare the budgeted with the actual numbers, for the most part, capex tends to fall short. So it's a wish list that we get in the budget. But very often we find that a number of states are not able to actually execute that amount of capex when the actual numbers come through. And the data that we have for about 23 large states up till July is only showing a 4% growth year on year, even though the base would have been pretty low given, again, that we were in the second wave of COVID-19 last year.
Can you just repeat that last sentence? You're saying that up until July, you're looking at state capex, and that is just about 4% higher than an already low base in FY22, correct?
Yes.
Okay. No, that's not very encouraging. And clearly, in terms of capex, state government budgets are more important than the central government. So this is not encouraging data. Mahesh, you've seen cycles in the past. Are there any straws in the wind that we can clutch, or even those are not yet visible?
No, you mentioned the straws in the wind. All the conditions required for capex to restart are in place. There is no dearth of money. There's capital which is sloshing around. We see the corporates have got a lot of cash sitting with them. They're investing into the equities of other companies, but they're not investing into their own capex. Government tax collections have been very buoyant. This is the best position that the government could have bargained for. And both the government and the private sector are not short of capital. Indian economy has got sufficient capital and, of course, a lot of labor as well, which is waiting to be deployed. It's a matter of putting them to work.
Okay. No, I agree with you. We have just run all the data from Provis on how gross fixed assets over the last 2 years are actually at way lower than what they were even in FY20. That's gross fixed assets, and what people have done with the supernormal profits is actually put it in the stock markets. And we just ran the bar chart on how the investment from corporate treasuries in equities has gone up. So people are just reinvesting their money in stock markets. They are not putting it in plant and machinery just yet. Aditi Nayar, you'll also look at corporate balance sheets. What is the overall view as an economist? Are we just still at a state where conditions are good, but Capex cycle has not started, or are there any indications from the corporate sector of cycle actually having started? I assume that in renewable power it has started.
Absolutely, Lata. It's very sector specific right now. We're not seeing that broad-based capacity announcement that we should for a capacity utilization that was already at 75% in Q4 of last year. So I agree the conditions are right. And I'm very hopeful that in another quarter or so, we should start to get a more broad-based capacity expansion coming through for the private sector. Because there are signs that perhaps now where this year has been very interesting. We've had very high service sector demand,
yes,
but we've seen a shift away from consumption of goods to services. Plus, we've had high inflation, and there has been some amount of uncertainty which has come in. Corporates probably wanted to have a little bit more clarity on the geopolitical issues and the commodity price cycle before going ahead with investment. But there's one piece of data that I'm very encouraged by. We had very high GST e-way generation in the month of August. And that's the cusp of the festive season starting. So hopefully companies are more encouraged that we're going to have a good festive season. And if that's the case, then perhaps we should be ready. With all the other conditions being in place, we should be ready for the Capex cycle to really kick off after the festive season.
I take your point about GST numbers. They are really heartwarming. The only thing is that they also reflect the higher prices. This is also a reflection of higher nominal GDP and not necessarily higher volume of consumption. Last thoughts from you, Mahesh. Where are we? Would you say glass half full or still glass half empty?
Well, we have a long way to go. before the Capex cycle will kick in. Let's not kid ourselves. The conditions are good, but the corporates are intelligent folks. They know what they're doing. I don't think they're seeing sufficient demand. And you see consumer sentiments, which were rising till around June, July or so, have tapered. In fact, they declined before they recovered. So the monsoon was not very good. Rice cultivation is down. Earlier, we had trouble with the wheat crop. We have high inflation. If you have consumer sentiments like they are now, I think we should be a little cautious in expecting the festive season to see some big boom in demand. So we will have a little more difficult times before we see investments picking up. Let's wait for a couple of more quarters.
Yeah, I take your point entirely. Aditi and Mahesh, thank you very much indeed for enriching us with your data and your understanding. Aside from the consumer hesitation, there is, as Aditi pointed out, corporate hesitation. You know, when you're talking about war and the global inflation and a possible tightening of financial conditions and maybe potential recession in some large economies, drags in China because of lockdowns, etc., it is difficult to expect the corporate sector to completely open out its purse. They are doing perhaps the fair thing by their shareholders and putting it in the stock market, which is doing very well. We'll carry on this conversation as things turn. We wrap up on Bazaar on that note. Trading ideas lined up for you on Chartbusters.